Hey everyone, it is Evan here from the Trade Risk on Tuesday, January 15th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So let's kick things off here with our dashboard. Take a look at what's going on. The major averages right across the board are all off to a nice positive start. Fourth week in a row now that we've said that same thing, and markets continue to start off resilient and continue to make upside progress. Right across the board, we're up almost 1% today. Q's leading the charge, up almost 2% in today's trading. 5-day change is all positive. We are still above the 10 SMA, and notice here the Qs have actually reclaimed the 50 SMA. Now, I don't know what the slope of the 50 is right now, but it is interesting to note that we have repaired enough damage to get back above the 50 SMA for the Nasdaq 100, and we can see we are above in 3 of the 4 major averages last week's highs. Just the Russell that is a little bit reluctant at this time. When we look down here at the major sectors, we got semis that are continue to lead, and notice the big increase here in financials. In our last 2 videos, financials had been in sort of the bottom 3 or 4 for relative performance, and now this week we got a nice surge to the upside here that is helping kind of give that new win to the market, if you will, on this latest updraft. We do have earnings out on some of these banks, and some of them have been mixed, but the market at this time still seems to be shrugging that off and working higher. So financials joining the charts to the upside with semis and biotech. And then when we look at some of the major markets here, we got natural gas, which had a big surge here recently, followed by energy, emerging markets, and the VIX on the downside continues to unwind. So let's jump into the S&P. Actually, I had a couple of questions come in on this. This is a free, market. This is a free page that you can get to on hosted on the Trade Risk. Just thetraderrisk.com/market-technicals. I tend to only update this after the market close. So if you're looking at this for intraday information, probably not going to be good. Sometimes it gets updated intraday, but generally speaking, after the close is when I update this. But I had a couple of questions come in on how to get access to this. It's just something that I've built and sort of embedded on the site. So feel free to get there. There's no password or anything else if you want to reference that page. Let's jump into the market. So S&P 500 weekly chart here, you can see up just about 0.5% here on the close on Tuesday. We can see that we are still clawing back. We've in fact now reclaimed the entire sell-off from that last week of 2018, that 7% nasty sell-off week, high volume that came in at the end of 2018. We've now reclaimed all of that, and we are above that highly anticipated and watched 2600 level. This is effectively the breakdown spot in the S&P 500 in mid-December of 2018. We are back to testing it right now, and this is where all eyes are sort of watching on how we behave around these levels. Now, we are up 4 weeks in a row. We've covered a lot of ground to the upside, up about 11% off of the lows, so it is still very tough to want to buy, to load the boat new longs here, but I guess, you could have said that over the past 5, 6, 7, 8 days, and the right trade has still been to hold on to those long positions. So for now, the trend does remain higher. MACD still in negative territory, but on the rise right now, and we have, as we talked about just there, we have poked our head above last week's highs. So let's get down to the daily chart here. Let's take a look at what's going on. We'll switch over to the SPY ETF because I think people like to see these levels instead of the cash market. And what you can see here is that, we totally negated the session yesterday we had where we actually saw a little bit of selling come into this market. And admittedly, this was enough to trigger a short position for us, a short trade for us. So we do currently have an underwater short trade in the SPY right now. We'll talk about that in just a moment, but let's back up just a couple of steps and talk about what's gone on here. We've essentially ripped, like we mentioned, 11% off of the lows, and we started to consolidate and move sideways in this range here from about 256 all the way up to, call it 260, 259 and change. So about a 3.5 point range for 4 days, trying to work off some of those overbought conditions that we now experience. We are still overbought on a lot of traditional metrics. Throw on your RSI, stochastics, percent R, whatever you want to look at right now. We're still in the short term overbought and extended based on the ground that we've covered here, and we are coming into those declining moving averages and prior supply. So it makes it for a very tough trade to want to put on those new longs, and it looks for, it looks like we would want to be positioning for that potential rollover as we get up here. And what we've seen, though, is that the selling pressure just hasn't been able to stick. The market is continuing to find lack of motivated sellers here. In fact, if we go back over the past 4 or so trading sessions, each gap down that we've seen, so starting even from this bar right here on the 10th on Thursday, notice we started with this gap down in the market, we probed lower briefly, and then we just saw a bid and close near the highs. The very next day on Friday, we again started the day off weak with a gap down, we probed down a little bit, and then we closed right at the highs. Same thing happened this Monday, where we started with a more meaningful gap down, and this time below Friday's lows. So this one seemed like it had a little more, a little more bite to it yesterday on the open. Breath was a little bit more negative than we've seen in recent times, but notice the sellers still couldn't, get progress based on where they opened on the session, and we closed, essentially flat, a little bit higher, still down 0.61%. So it kind of left the door open for that potential follow through for the sellers to really start to take some short-term control. But notice today we did not get that at all. We got the exact opposite, a slightly higher open, a rally, and a close at new highs here to finish off the session. So when we look here going ahead now for the SPY, we should be paying attention to this 256, 257 area, essentially Monday's lows. That's where we're going to want to see this market breakdown if we're looking for that rollover. If the sellers are going to regain control here, that's what they're going to need to take out on the downside. And on the upside here, I think the bulls are going to want to see a follow-through day. Just like the sellers wanted a follow-through day yesterday, we're going to see if the bulls can get a follow-through day today and pull us away from this range and start to work ourselves back into this old range that we were trading in back in November and December. There is an open gap in the SPY ETF here. Comes in right around 265. I believe it was on this 14th here of December. That is still open. So if you're a trader that likes to get those trade for those open gap fills and those tests, keep that in mind, about 5 points ahead of us. Otherwise, we'll see if the buyers can continue to keep this market bid, hold on to the extended levels here, and keep the rally alive in the face of a little more earnings. For us, our short trade that we have on here, if we do get that follow through day tomorrow, not sure exactly where our stop line's up at the moment. I'd have to go look, but it comes in right around this 263 area, I believe. So if we do get that follow through, we will be out of the position that we initiated yesterday. Otherwise, we'll see if we can get failure up here and a move back down into this range. We still look at volume here, and volume still has been decelerating. So we do have kind of this rally on ever decreasing volume, a slight uptick finally above Monday's trading, but really still well below the 20-day average here. So volume continues to dry up. The VIX continues to evaporate. We are down to 18, so essentially got a full 50% retrace now from peak to the close today in about 13 sessions. So pretty substantial unwind there in volatility, a lot of compression there in overall ranges, and I think that is about all I had for the S&P 500. I think we can move on to the IWM, and one interesting thing about the IWM, let me switch over to this other board here, is this approaches resistance here, this 145, its breakdown level, it's consolidating right under it. MACD still rising here, on the rise in positive territory there, so that is constructive for the IWM as it works off its recent rally here sideways. But what's interesting here is the IWM has been leading to the upside throughout this rally, and notice today it did not break out to new highs like the S&P 500 and the Qs. So I don't want to make a huge deal out of it because the structure here is still sound, it's still intact. But if we're looking for those subtle short-term clues of different market behavior here, the Russell not leading on this breakout is maybe something meaningful. For now, it's just an observation. I wouldn't put a ton of weight on it, but if we continue to see, say, underperformance in the Russell now, then that would be fairly notable, as it was the first to lead us on the downside in December and last year, and then led us on the upside here on this retracement into 2019. So IWM otherwise still moving sideways. Pay attention to, say, 141 to 145 is effectively the range that we would be watching here. Otherwise, buyers continue to be in control. The Nasdaq 100, this was the best performer this today, still on pretty low volume, a slight uptick here, but I mean it's still well below the 20-day average. Notice the MACD still rising and into positive territory. We cleared above all these recent cluster of highs, and we are well within the trading range back from October, November, December of 2018. And as we mentioned at the top of the video, this actually did reclaim its 50 SMA too. So on a relative basis here, the Qs is certainly back into its prior structure here, unlike the SPY, which is sort of knocking on its door, and really the same for the IWM, knocking on the old range here from the downside. So that, I think, covers everything I wanted to say about the major averages. Remember, expect those earnings to continue to come out. We still have mostly financials ahead of us for this week. I think we have Netflix on Friday, if I'm not mistaken, but then I think we have all of the other, big tech that everybody's looking at later in, the first week of February or the last week of January. So we have a little bit more time for the thick of that mega tech, so to speak. So let's jump into some of the other major markets here. Go to TLT, which is down on the week, 74 basis points right now, coming back into short-term support. This is where buyers stepped up around 120. This would be, if you're bullish here on TLT, if you think TLT can hold a bid, this would be really a brilliant place for buyers to step up and support TLT. Is right in here. That would be a very modest retracement, would hold effectively high and tight, and if you can move sideways here in between 120 and 123 or so, that would be a very bullish outcome. If we start to roll over here, if this pullback gets steeper, then we would have to look back down towards, say, 118 all the way up down to 116, 117 for those next levels. So there is a decent amount below here. If it starts to break, you can kind of project up a trend line here. This from the November lows, if you want to do that. Doesn't really mean a whole lot to me there, but you could look at this as a bigger channel that we've been rallying in since the bottom of November. If we go to oil next, this is also helping support the market today. Of course, as oil rallied 3%, it's holding up. It still, of course, has a tremendous amount of larger term technical damage, but it's in the short-term retracement mode. It's back to this consolidation sideways that it took place in late November, early December, and you can see with today's rally up, very similar to what equities are doing here. If we can start to escape this range to the upside, then oil, suddenly starts to look like it could put in another leg higher. Same with equities. Real tough to chase this. Really depends on your time frame, so on and so forth. But 20%, 18, 19% off of the lows. It's again, increasingly difficult to put on fresh long exposure unless you're using, fairly tight stops or a much longer time frame. Natural gas, we'll go there next, which had a remarkable day yesterday, 14%. When natural gas wants to move, it really moves. And we talked about this as a potential kind of pop back up into the 30s here. Didn't think it would happen in one day. Certainly no trade on it ourselves. But, the past week or two, we said, is this this was consolidating, and then as this started to break up and hold around 25, it was extremely kind of extended to the downside, got extremely extended to the upside. The pendulum swinged in the other direction, and now it's starting to swing back up to the upside here. So to me, it's really, this is tough price action to trade. There's a lot of just gap movement here overnight, so there's nothing that I see immediately interesting in natural gas beyond just saying, you know, short-term momentum is certainly shifted now back to the upside. When we go to metals, GLD continues to remain very quiet, but very resilient. This is not putting in a steep pullback after covering a lot of ground to the upside. It's holding up near its highs. Ranges are compressing here. It's really, you know, almost consolidating through time rather than through price, and that is, so far anyway, constructive signal. If we can start to break out from this range, you know, gold could continue to run here and make its way back up to, you know, the summertime 2018 levels from, you know, 5-6 months ago. On the silver side here, very similar comments. A little bit of volume coming in today here on the ETF silver. But this is really, you know, again, holding up high and tight, just consolidating through time, which, you know, again, isn't a bad thing whatsoever. If we could just put in a little more, you know, a little more work sideways here, maybe this is ripe and ready for a continuation pattern to the upside. We'll have to wait and see. If we start breaking down, of course, then, you know, that is a signal in itself, and we would need to pay attention to that if we start to sharply roll over from either of these near-term ranges in gold and silver. So that is what I got for the midweek video. Hopefully everybody's off to a good start, enjoying the week. Thanks so much as always for tuning in and watching the videos every Tuesday and Friday. You can catch us on the Trade Risk blog or subscribe on YouTube to be notified of all of our latest videos. Thanks so much, and talk to you later this week.